This is the Energy Makers Show, featuring the innovators, financiers, and policymakers focused on the global energy demand. Brought to you by NRG, moving clean energy forward. And here's your host, Paul Dickerson.
Hi, I'm Paul Dickerson, and welcome to another episode of the Energy Makers Show. First up, Russ Capper sits down with Daniel Border, a managing consultant with BKD, focused on energy transaction services, discussing today's buy and sell landscape in the oilfield services space. Next up, Jose Beceiro with the Austin Chamber of Commerce, where he serves as Director of Clean Energy Economic Development, discussing Austin's efforts to attract clean energy companies. All that right after this.
At BKD, we understand the constantly shifting nature of the energy industry. As a national CPA and advisory firm, we serve energy clients from the beginning to the end of the cycle. Our experienced energy advisors serve approximately 300 energy companies in exploration, midstream, downstream, oilfield services, and power production. Plus, we're the largest North American member of the Praxity Global Alliance, which means we can help you wherever you operate. Contact a BKD advisor or visit us online to learn more.
This is the Energy Makers Show, brought to you by NRG, moving clean energy forward. And now, back to the Energy Makers Show with your host, Russ Capper.
Welcome back to the Energy Makers Show. My guest today, Daniel Border, Managing Consultant with BKD and a member of BKD's transaction services practice, these days focused mostly on energy, no doubt. Daniel, welcome to the Energy Makers Show.
Thank you very much, Russ.
You bet.
My pleasure.
You bet. Well, let's start by you telling us about BKD's energy practice.
Certainly. BKD's energy practice encompasses the entire spectrum of energy, from upstream, midstream, downstream. But most importantly, we focus a lot on the oilfield services and products to the companies that are operating in the production and midstream, downstream areas.
Okay, if you looked at the geographical map of BKD's offices, man, you're overlaying all the activity quite well.
Absolutely, yeah. Especially Texas and Oklahoma.
Right.
We have 7 offices in Texas and Oklahoma, and that's where we're seeing a lot of the activity these days.
Okay, so here you are in transaction services. We're in this energy transformation of extraordinary proportions in the country. I would assume that the number of transactions you're doing is pretty high these days.
Yeah, absolutely, Russ. Within the last 2 years, it seems like a very high percentage of our deals are focused on the energy industry. Many of the deals and the companies that we're working with didn't exist 3 or 4 years ago, and now they're already looking at liquidity events. So it's very interesting the incredible growth of these companies and just seeing how quickly they're moving through the process of selling.
Absolutely. Well, I would also think that there might be some older companies, some family-owned operations that have just been through ups and downs, and now might be the best time in their history to look at selling the company. Is that kind of accurate too?
That makes up a pretty good demographic of our clients as well, or target companies that our clients are looking at,
Sure.
at buying. It's interesting because many of these companies were founded by the baby boomer generation.
Right.
And now they're getting up to retirement age, and they don't have a clear succession plan, and they're not really familiar with what are all the options out there. And that's where BKD and my team can come in and help them understand what are their options, help them understand where the value can be extracted from the company, and really help guide them through the sale process.
Sure. All right, so let's say that you're representing someone that's going to sell a company. What are the techniques? What are the processes you go through to help them?
Yeah, that's a great question, Russ. Many times these organizations have been run by the founder owner, and there really wasn't a whole lot of attention paid to what's driving the economics of the business.
Right.
What does the accounting systems look like, and where is margin really being generated from? So we can go in and help identify those areas of opportunity for the company, areas that they can potentially highlight in their sale process. We'll also go through what's called a quality of earnings analysis. Basically, we're going to look at what are the repeatable earnings of this company after they sell. And that's really what's going to drive the value of the transaction. So as we go through this process, number one, we're helping management kind of understand what to look forward to once a buyer is identified and comes in and does their own due diligence. But it also kind of levels the playing field with information. If a seller has the same information that a buyer has, the negotiation table is a lot fairer.
Yeah. When you talk about the value of earnings, I think some of these companies are bound to be kind of real sort of tightly owned and operated, and maybe not real careful about how they did accounting and that sort of thing, and they take advantage sometimes of owning their own business. So do you go in and kind of level that out? I guess you do. I guess you answered that already when you say what it looks like once the buyer owns it.
Yeah, absolutely. Many of these privately held companies, there's some items, expenses that expenses that basically, are non-recurring going forward. They're personal trips that the founder owner's taking, or automobiles that they own and expenses flowing through the company. We're going to go in and we're going to identify where all those expenses are, and basically make an adjustment to their earnings before interest, taxes, depreciation, and amortization, or EBITDA.
Sure.
But also, we're going to look at what are the non-recurring revenues that are present there. There are sometimes companies that have one-time events that generate earnings that they're not going to repeat going forward. So in some cases they'll have an earnings deduct for those events.
Right. Now you're based in Dallas, correct?
That's correct.
Okay.
Yep.
And so does that mean you do a lot of Permian Basin deals and maybe some Eagle Ford deals as well?
Yeah, my client base is primarily private equity groups who are looking at making investments in the energy industry, but also large companies who are looking at making add-on acquisitions or divestitures for on the sell side. Right. So many of those companies are located in Texas, Oklahoma, New Mexico area. So.
And your primary focus being these buyers, sometimes private equity firms. Do they just call you up and say, Daniel, we want to buy one of these lift pump companies, and we know there's a few of them. Would you go find one for us? Or is it more likely that they call and say, we have a targeted company here we want to buy. Would you go check it out for us?
Yeah, the second scenario is more likely for me, where they've already identified a target and they need to put together a quality of earnings analysis, a due diligence process, essentially, where we will then go in and basically examine the company and make sure that what the seller is claiming is there is actually true and accurate. I mentioned on the sell side of the transaction where we're going to identify expenses and so on that are non-recurring going forward. We're also going to do that on the buy side, and try and help our buyer truly understand what the ongoing economics of the company look like. Now, it's interesting because many of these companies, since they are not extremely sophisticated, but they've been around several years, they've generated kind of a history of transactions, of earnings, and so on, but they can't necessarily generate the type of information that a private equity group needs in order to make an educated decision on whether or not to invest. So we've developed a process where we can go in and basically extract the transaction level data out of their system and basically build up the financial statements from the bottom up. And this gives the potential buyer a completely different look at the company and what's driving the economics of the company than possibly what the founder owner can generate. We call this process data analytics, and it's really kind of the initial start of the due diligence process for us.
Okay. Now, I would also expect, and maybe this is not the case, but I would expect that many of these companies, once they're acquired, whoever has been operating the company often stays with it.
Yeah, it really depends. If the founder owner has a very strong management team and he suddenly gets a big check in his pocket, he may find that the Bahamas are far more attractive than continuing to operate the company.
But his management team would stay with
absolutely,
it. Right?
Absolutely, yeah. But there are some cases where maybe the founder owner still has many years left of his career, and he does want to stay in with the business. He may roll over some equity into the new company that is established post-transaction and continue on for a number of years, and then take what we call a second bite of the apple once they sell again.
Okay. Do many of these deals end up involving an earn-out for the seller?
Occasionally they do, yes. And in particular, it's really big in the energy industry for companies that are fairly new.
Right.
If they've only been around 2 or 3 years and they've had this significant growth trend, a buyer may be a little skeptical of whether or not they can continue that trend going forward. So they'll structure part of the transaction with an earn-out to be able to motivate the seller to attempt to continue that trajectory.
All right. Well, Daniel, I really appreciate you coming in and sharing your expertise with us.
Thank you, Russ. I appreciate it.
You bet. That's Daniel Border, a managing consultant with BKD, a member of BKD's transaction services practice. And this is the Energy Maker Show, heard on the radio and seen right here at TheEnergyMakers.com.
Welcome to another episode of The Future of Water and Unconventionals, brought to you by IHS and CAP Resources.
Hello, I'm Aaron Horn with CAP Resources.
And I'm Sarah Fletcher with IHS.
Today we're going to talk about the regional variation in water management in unconventional plays.
A lot of the analysis that we've been doing recently shows that there are drastic cost differences across the United States, and especially when you compare plays that have disposal injection constraints to those that don't, you can see overall water management costs increase by over 1.5 times. I think we're also seeing that transportation costs can be up to half of the total water management costs in a play. So in areas where there are regional labor shortages or infrastructure challenges, those plays have much higher costs overall.
I think that's right. And the other thing that I think people don't think about, especially people who are covering this area and trying to address the money that's being spent regarding water management, is that operators handle money differently. And for the capital expenditures that happen related to the hydraulic fracturing operation, right after the drilling operation, that money comes from the capital budget. Whereas the disposal cost, which can really be highlighted and exaggerated by increased distances that trucks have to travel to disposal wells, that increased cost is sometimes felt by the operating expenditure, or what's commonly called lease operating expense. And that lease operating expense is felt much more strongly and much more impactfully to the operators, the production and operation team.
Yes, that's right. I think this highlights that there's no one-size-fits-all solution for water management, and different costs will be felt differently by operators in the various plays across the United States. So check back for more on water management and market opportunities.
And for more information on water management strategies and water market opportunities in the continental U.S., go to ihs.com/waterunconventionals. This is the Energy Makers Show, brought to you by NRG, moving clean energy forward. And now back to the Energy Makers Show with your host, Paul Dickerson.
Welcome back to the Energy Makers Show. Our guest now, Jose Beceiro, Director of Clean Energy Economic Development with the Austin Chamber of Commerce. Jose?
Paul, thank you for having me.
Well, thank you for coming down. So tell us what's new with the Austin Chamber of Commerce.
Well, the Austin Chamber, we are busy helping the regional business community in the Austin region. And in 2004, we launched an economic development program called Opportunity Austin, which is focused on diversifying the Central Texas regional economy. So we work with the major employers, the small businesses, the city, and 15 regional communities on developing the Central Texas economy. So.
Well, and we have a lot of our audience in Boston and in San Francisco who will be looking, saying, all right, if I have to move to Texas, Austin may be where I want to end up.
Right.
So I'm eager to get into, some of your work specifically with some of these clean energy companies. It's been a tough time for clean tech companies, certainly on the coast, as some of the venture funding maybe has backed off a bit. What opportunities are you seeing in Texas and in Austin?
Yeah. Well, I think Texas provides a number of advantages for the clean energy industry. I think the fact that we are, and our state is so big and robust, and we have a big energy demand, there's a lot of opportunity to figure out a way to solve the peak energy demand issue, right, which in Texas is primarily air conditioning. So solar, peaks during the day when the sun is shining, and coastal wind does as well. And we also have infrastructure that our state has built out through the CREZ policies, the competitive renewable energy zones, and ERCOT manages our state grid. So with all of that combined, I think that Texas is an ideal location for renewable energy development.
And how is it that Texas is seeking to attract companies, right? I mean, our tax structure is better. Austin's a beautiful place to live. What other dots can you connect to draw them in?
Well, I mean, we have a variety of incentives through the Texas Enterprise Fund. We have tax abatement policies similar to most states. I think that what Austin offers differently from other cities around the country is that we are a very progressive community. We have a high-tech sector that was established in the 1960s and 70s, and primarily California companies are very attracted to that. They want to be around the talent. They want to be around the research institutions like the University of Texas, and they also want a lower cost location to do business. And Texas is half the cost of doing business and half the cost of living than California. So it's a great combination for companies when they're looking to improve their bottom line.
Well, and you have several key leaders there in Austin, and you mentioned one in the University of Texas. Share with us some of what UT has been doing.
Well, UT, it's known as the Oil and Gas Research Institution. It's been doing oil and gas research for over 100 years now. The Center for Electromechanics, the University of Texas, Pickle Research Campus is almost exclusively focused on energy research and development, and that attracts a lot of industry to Austin to partner with those different research divisions. The Cockrell School of Engineering is focused on oil and gas engineering projects and research, as is the business school. So all of the entities at UT are very much oriented towards energy. And that draws oil and gas, it draws renewable energy companies, it draws battery technology companies. Smart grid technology is another big area that we're getting into now in Austin. So in my opinion, the University of Texas really is the anchor for the clean tech industry and the energy economy in Central Texas.
There's another group, and we had the leader of it, Brewster McCracken, on the show about maybe 12 months ago. But tell our audience about this Pecan Street project and what it is today.
Well, Pecan Street was formed in 2009. It was funded initially through a Department of Energy grant. It was a grant, and it was part of the FOA 36 funding opportunity announcement. And it was specifically for a smart grid demonstration project. And the Pecan Street project was awarded $10.4 million through this funding opportunity. And we have been using that grant funding for the last 4 years now on building out a smart grid demonstration project in Austin, Texas. And the focus of the project has been on harvesting energy usage data from homes and businesses. Yeah. And we have about 600 homes that are part of the project today. We also have a number of commercial businesses as well. And what we're trying to understand is how homeowners and business owners use energy throughout the day, through the different seasons of the year, what technologies we can install today that will have a direct impact on energy usage behavior. And we're providing all of that energy data to the private sector, to academia, to researchers, to understand how to design new policies for energy efficiency, how to develop new smart grid technologies, how to improve the efficiency of utility infrastructure. So those are all the primary goals of Pecan Street, and we have a number of successful results already. We now better understand what the impact of high density concentration of rooftop solar within a 1 mile radius in a neighborhood does to neighborhood substations and transformers.
It's important.
And it is very important to understand what the impact is on the infrastructure. And the car companies like General Motors and Toyotas, they did a great job of designing the electric vehicle cars that we now see on the roads, but they didn't have the opportunity to really study what a high density concentration of electric vehicles does to the energy infrastructure.
Right.
So we are now testing out over 70 electric vehicles within this one neighborhood in Austin, Texas, and we now better understand what happens when folks come home from work at 5 o'clock and start trying to charge their vehicle. Whenever you have air conditioners, home air conditioners and office air conditioners all cycling at the same time, it creates a pretty high stress on the energy infrastructure. So we're looking at ways to shift charging till later in the day when you get past the peak demand times, which is from 3 to 7. So that type of research and that type of analysis is something that the auto industry was requesting, and that's how Pecan Street was able to play into that. So.
Well, and as if Pecan Street and the University of Texas weren't enough, you also have this major event called South by Southwest, who has developed an eco component.
Right.
Share with us about South by Southwest Eco.
Well, I think South by Southwest, it's premier events organization. They're transitioning into a year-round event organization, and they've added different specialized conferences, and Eco is one of those. They launched South by Southwest Eco 2 years ago. This will be now the third year of South by Southwest Eco. Each year has doubled in attendance, and it's really doing a fantastic job of coalescing all the different pieces of the energy economy. It's bringing in the experts and the thought leaders on environmental issues, on sustainability, energy efficiency, clean energy, but also discussing the impacts of oil and gas, in our regional economy and how everything kind of plays together. And they're also looking at all the different intersections of wealth and energy and water and energy and all the things that we always knew there was a correlation, but now we have a forum to actually discuss those issues.
Well, it's a busy time for companies on the coast or elsewhere looking to come to Austin. How do they find you?
Well, at the Austin Chamber, we have a pretty strong brand. We have a great website where they can find our information. It's austinchamber.com. I am out throughout the year attending the major renewable energy conferences. We go out to New York several times a year, in California, since that's the biggest source of new companies to Austin. We spend the vast majority of the year out in California. We do about 15 trips out to California. So we're always available and ready to talk to companies about moving to Austin.
Well, thank you for your work, and thank you for coming by today.
Thank you, Paul. I appreciate it. Thank you.
And that wraps this episode of The Energy Makers Show, heard on the radio nationwide and seen right here at TheEnergyMakers.com. I'm Paul Dickerson, and we'll see you next week.